Choosing between a Bitcoin ETF and real Bitcoin is like deciding between storing gold in a bank vault or your own safe. One is regulated and secure, the other is private and fully yours. But which is smarter in 2025? I'm Brett at CryptoGX, and in this video, I'll help you make the decision if you should invest in Bitcoin or in Bitcoin ETFs. So for a little background, BlackRock bought $2.5 billion worth of Bitcoin for its spot Bitcoin ETFs. At that point here in 2025, Bitcoin's price broke $123,000. And you're probably wondering how to kind of jump in on this. Should you buy a Bitcoin ETF, which is, a regulated fund that tracks Bitcoin's price, or should you buy Bitcoin directly to own the real thing? ETFs are super easy. They're like buying stocks, but they come with fees and, other considerations. Owning Bitcoin itself gives you full control, but you'll need to know how to keep it safe. So let's break down the very complex choice into very simple pros and cons to find out what's the best for you. So let's get started with what is a Bitcoin ETF. If you're new to crypto or investing as a whole, don't worry. I'm going to break down this very simply for you. So a Bitcoin ETF is a fund. It is a type of asset that is made up in a particular way so that you can buy it through a regular stock brokerage. This is the same as if you were going to buy Nvidia shares or Tesla shares. It tracks the price of Bitcoin so that you can get exposure to Bitcoin's value without owning the actual cryptocurrency. So it's pretty cool, right? But here's how it works. Funds like the iShares Bitcoin Trust or Fidelity Origin Bitcoin Fund hold Bitcoin or Bitcoin related assets. When Bitcoin's price, which as you can see is now over $110,000 in 2025, when it goes up or down, the ETF's value moves along with the same price of Bitcoin, roughly, not exactly, but roughly similar to a very close degree, I would say. Now, you don't need to set up a crypto wallet or learn about crypto exchanges. You just use your existing brokerage account, which, for your regular investing account that you can set up with Fidelity or, people like that, or BlackRock, obviously. And it makes it very beginner friendly since most people are using these funds to invest in anyway. But why do people really love Bitcoin ETFs? So first off, they're regulated by the US government, which adds a layer of security. This reduces some risks like fraud that can pop up in the crypto world. Now, secondly, they're super convenient. No need to worry about storing your Bitcoin safely or losing access to your investments as long as you've got your name and your ID. If you lose your password on your investment account, you can use the forgot password option. That's not possible in crypto. So definitely the easier route when it comes to getting into Bitcoin and crypto investing. And plus, with over 42 crypto ETFs available in 2025, you've got a lot of options. As you can see here on this ETF list, there are a ton as I'm scrolling down. There's even a second page here with more options here. Now, the iShares Bitcoin Trust that I mentioned before, it's pulled in over $33 billion in investments. But there is a catch. Now, the catch is that thing that I mentioned before, that you don't actually own the Bitcoin with an ETF. You can't use it to buy stuff or dive into decentralized finance, also known as DeFi. Basically, you can't make cryptocurrency transactions on the blockchain if you want to. Also, ETFs come with something called management fees. They're usually between 0.1 to 1.5%, which, is nothing compared to returns over time. However, you're limited to trading ETFs only during stock market hours, unlike the regular crypto market, which is 24/7. So, fees can compound, but, also if you want to trade at any time, you're going to want to just own Bitcoin or be on a crypto exchange so you can trade at any time of the day. ETFs, if the next crash happens during out of office hours or out of stock market hours, you're going to have to wait until the next stock opening day to be able to sell it. Now, without being too dramatic on the negative side, there's some other positives. Fidelity Investments just approved a $10 trillion in-kind creations and redemptions, which basically is just evidence of Wall Street's growing commitment to Bitcoin ETFs. This kind of institutional grade feature reduces friction for large investors, makes it easier for the big players to come in and invest. To simplify, ETFs are a simple, regulated way to invest in Bitcoin's price, perfect for beginners or anyone who loves the ease of their brokerage account. But those fees and lack of real Bitcoin ownership are worth thinking about. So now, what is it actually like to buy Bitcoin? Now, this means that you actually own Bitcoin, the real cryptocurrency, not just a fund that tracks its price. It's like holding gold coins in your hand instead of a certificate saying that you own gold that is being held in a bank somewhere or something like that. So you buy Bitcoin through a crypto exchange like Coinbase or Crypto.com. But when you buy on these exchanges, you can then take it off of the exchange and store it it in a digital wallet that you control. Also, if you want to send Bitcoin to someone, you want to use it for online purchases, or you want to explore decentralized finance, also known as DeFi, you can do that as well. Direct ownership also means that you might pay almost no fees for holding on to your asset, other than the trading fees on something like Coinbase or Crypto.com. Now, here's the flip side, the thing to consider. Not even a downside, but it's something to consider. You're responsible for keeping your Bitcoin safe. That means that protecting your wallet's private keys, those are the most important thing that you can think of. You need to write that down in a very safe place, lock it away, make sure it can't get set on fire or, anything like that. You lose these passwords or someone else gets access to them, then your Bitcoin is gone, or at least someone can either get access to it, or basically if you don't remember it, then you can't get access to your Bitcoin ever again. There is no customer support. There is no forgot my password. On top of that as well, you also need to learn how to use exchanges and wallets, which can feel tricky for beginners. I've got videos on the channel here, so make sure to subscribe. Check out the other videos on the channel regarding that. But that's the whole point here on CryptoGX. I'm just trying to make everything as simple as possible. But back to owning crypto versus ETFs. Crypto exchanges are not as tightly regulated as ETFs are. So there is a bit higher risk of scams and hacks and things like that. The US is definitely getting stronger with its crypto regulation, established a strategic Bitcoin reserve. They also passed the Genius Bill, which, is still less regulated when it comes to comparing against ETFs. But these things are in process and they're kind of moving in the right direction with this administration. But to simplify, buying Bitcoin directly gives you freedom and real ownership. But the downside is that it requires effort to keep it safe and kind of understand what you're doing. So in the end, what's actually better for you, Bitcoin versus Bitcoin ETFs? Let's compare them side by side with some numbers to see what benefits you the most in 2025. I'll talk about things like ease of access, fees, security, control, and profits. So let's discuss everything. First off, how simple is it to start? Bitcoin ETFs are super easy. You buy them through your regular brokerage account, like purchasing stocks. You can search for IBIT, which is the iShares Bitcoin Trust, and just click buy. No new apps needed. Now, buying Bitcoin directly takes a bit more work. You can sign up for an exchange like Coinbase or Crypto.com, verify your identity, and buy Bitcoin and move it to a digital wallet with private keys like a secret code. It's manageable, but ETFs are simpler. Now let's talk about fees. ETFs charge a yearly management fee. Now, for example, IBIT charges a 0.12% management fee. Now, if you invested $10,000 worth into this Bitcoin trust, you'll be paying $12 in fees a year. Buying directly on a crypto exchange means a one-time exchange fee or trading fee. It's usually about 0.1 to 0.5%. As you can see here on the Coinbase website, a maker fee versus taker fee. The BPS just means that you divide by 100. So the maker fee here on the top, under $10,000 worth of trading, is 0.4%, and the taker fee is 0.6%, which is still lower than the 0.12% per year that you're paying on the ETF. So on that $10,000 investment, it's going to be a $4 to $6 fee just on that single transaction one time, not every year. Now, it's already half roughly than the other within a year, but if you hold long term, direct buying saves you even more money. Now, when you compare these two, it depends on your motivations and what you're going to do. If you were going to invest and hold over a long period of time, that one-time fee is going to be a lot less over time. Now, if you're going to be consistently making trades, those perpetual one-time fees over and over again might be eating away at your profits there. So maybe an ETF is better for you if you are going to be constantly making transactions. So now we're going to come to the most critical part, security. ETFs use experts like Coinbase Custody for offline storage. Plus, regulators watch over them. You don't have to worry about losing your investment. With direct buying, you protect your private keys. You lose them and your Bitcoin's gone. If you are holding your Bitcoin on an exchange, it's slightly more risky. In February of 2025, hackers stole $1.5 billion worth of cryptocurrency from a crypto exchange called Bybit. In general, a self-custodial wallet keeps you safe, basically one that you take ownership and control over. Now, on the other side, ETFs are easier for beginners. They don't have to control anything. They don't have to worry about hacks. But when it comes to control, the ETFs don't really give you Bitcoin. Direct buying means you own Bitcoin. You can send it. You can can spend it. You can use DeFi applications to earn more. If you just want to invest, ETFs work, but for more options, you should buy directly. In general, Bitcoin has very high liquidity with 80 to 100 billion in daily trade volume. But on the other hand, Bitcoin ETFs have a daily trade volume of around 3.5 billion. But now let's talk about profits. That's the end goal, right? Both follow Bitcoin's price, but fees affect returns. If Bitcoin grows 10% and you put $10,000 in an ETF with a 0.25% fee, this will net you $975 after fees. Now, if you buy directly with a $10 fee or a 1% fee, then this will give you $990 at the end. So direct buying edges out slightly when it comes to the overall profit. And that's at least if you're talking about buying and holding for a year, not when you're talking about trading on and off every single day. Now, if we look at this global Bitcoin held by ETFs, you can see that in August of 2025, over 1.4 million Bitcoins are held by Bitcoin ETF companies. Companies buying and directly holding even more assets. These are companies that are buying and directly holding Bitcoin and likely even more assets for other ETFs and things like that. And if we look at the top 100 treasury companies, we can see that MicroStrategy, or now called Strategy, holds 632,000 Bitcoin. Bitcoin ETF inflows are also consistent and positive, and if the trend continues, every $1 billion inflow into Bitcoin ETFs will increase approximately $1,000 in the Bitcoin price, which just means that we're headed to even further insane bull market and very long-term Bitcoin price ahead of us. I wanted to finish off with these numbers just to give you kind of an understanding that both of these options are good. Obviously, if you want to consider in the fees and things like that, the baseline number of what you're going to make is going to be slightly more on just buying directly. But if it's easier for you, then ETFs are the way to go. You've got more regulation, you've got lots of options, but it really just comes down to what's your best bet. So let me know in the comments what you think you're going to pick when it comes to Bitcoin. Would you rather have an ETF or would you rather own your Bitcoin directly? As I mentioned before, I'll put links in the description for Coinbase and Crypto.com, where you'll get at least $50 in crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed this video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.